Hi, personal finance students. Hey, in this assignment this week, we were asked to select specific investments. And many of you did a really good job with that in selecting specific investments. But then at the top, you would select your asset allocation, which is this it's the percent of your money that you want in stocks, in bonds, money market, or other investments. And I wanted to kind of show a lot of the feedback I've given this week has been around, hey, for a person of your age, young, I wouldn't put so much in bonds and money market because, again, it's not going to grow at the rate that you want it to. And so what I did is I just put together this quick demonstration just to show that. So if I'm an individual and I want an allocation of, let's say, I want to have, let's say, 20% in stocks, and then I want 10% in bonds, and then I want 50% in like cash, right? So personal savings, etc. And then that leaves me with 10% for something other. You can see that my weighted rate of return, right, is only going to be 4.61%. Well, coming down here, what I did is I said, look, if you had $10,000 of initial investment and then you contributed $6,000 annually for 40 years, so you would have put in $250,000 at 4.61%, it's going to equal, or it's going to total 750,000. You can see for 30 years, your 190 invested is going to equal 428,000. You can see here your 70,000 for 10 years is going to equal 93,000. Now, pay very close attention to what I'm about to do. Let's say we flip that and we say I'm only going to go 20% cash and I'm going to go 50% stocks. Look what happens to these numbers. So now my weighted rate of return is 7.55%, and over 40 years, now my 250,000 that I invest becomes 1.7 million, almost 1.66 million. So when you think a little bit about your asset allocation and how much of that you want to go to stocks, bonds, money market, if you're young, you want most of it to go to stocks. This is my allocation. Let me show you what my allocation is, just so you can get an idea. So my allocation right now, and I'm 48, is 95,000. Actually, I'm 49. Is 95,000, and or sorry, it's 95% in stocks and 5% in money market. And you can see that that weighted average is 11.41%. So even at my age, I'm still playing the long game and investing in stocks because they return a better rate of interest. Now, understanding that, yeah, I've got at least 10 years more, probably 10 to 15 years before I even need the money. So that affords me the opportunity to be able to be in stocks for the long term. And so that's why you can see what that does to the money, how it increases it significantly over the long term. All right, I hope that helped everybody. Thanks for all your for all your inputs, and hope this is helpful. Thanks. Bye.